કિશન ભાઈ થોડોક અવાજ છે પાછળ એટલે આ લોકો ખાલી કહે છે કે 2-5 મિનિટ આમ દે. અચ્છા ચાલુ કર रहे चलिए. The Muhurat trading session, and it's an absolute delight to be at the Bombay Stock Exchange. Next year onwards, we'll be in our studios, bringing you the whole session live. For today, though, I've got a battery of special guests from here to try and understand what is it that they are thinking about the new Samvat. With me, the market veteran, one of the oldest brokers in the country, Mr. Kisan Choksey of Choksey Securities. Kisan bhai, thank you so much for joining us out here. And from all of us here at NDTV and DQ Prime, wishing you and family a very happy Diwali. Thank you. Thank you so much, and I'll seek your blessings, Kisan bhai.
Exactly at 6:15.
Are you confident about the Indian markets for the next 12 months?
Yes, definitely, I am confident for the Indian market.
Why so?
Because I am looking to the individual sectors and individual companies.
We are honored to have
performance
today our chief
of all
guest,
the
Ladies and
results are
gentlemen,
coming.
Mr.
They are
Dinanath
coming
Bashi, along
better
with his
results.
spouse.
So that gives confidence. And the biggest factor of the Indian economy revival is earning of the public sector.
Okay.
Yes, because that is the biggest thing that has happened in the economy. Because all these assets were invested, they were not working. They were asking for money, now they are giving money.
That's true. Results from Coal India, sale, etc. has been very good.
We are just few moments away. Just 52
There's the countdown for the
seconds
Muhurat
to go.
trading
Not
session is
even a
also on.
minute.
We'll
Are
kind
you
of
all
stick with that too.
excited?
Kisan bhai,
Can I hear the excitement?
every market,
Just
every new bull market has a new leader. Our PSU is the leader of this current bull market.
We are going to rise
Bull
excitement.
market is always preferred
30 seconds to
because
go,
lot of
everybody.
developments are happening, economy
Along
is
with the
improving.
countdown, I
They
want to
feel
hear
good.
the
Then the
claps.
corporates where you have invested money, they will be
22
doing well
seconds
and
to
your
go. Are
capital
you all
will
ready?
appreciate. That
Okay.
is the biggest
Are you all
advantage that is
excited?
happening.
Got it. Okay. Kisan bhai,
15
hold on to that
seconds to
thought
go,
because there's a lot of
everyone.
noise behind. We'll
Let's
stick
start
with
with
the
10,
gong from the BSC
9,
and then come back to Mr. Kisan bhai.
7,
So
6,
6 seconds left for the
5,
market to start
4,
on this new
3,
Samvat
2,
trading session.
1.
Yeah,
And
the gong goes
happy
in.
Diwali, everybody. Happy
And typically in a
Diwali.
Muhurat session, the markets
Diwali.
would do well in the initial half. Maybe they come off later, but this is symbolic in nature. Now that the opening session is done, or the opening gong is
A
done,
moment to be treasured by everyone.
let's get in Mr. Kisan bhai's views yet
सभी
again.
के लिए काफी बड़ा
બધું સમજાય છે કિશન ભાઈ, તમે ચિંતા ના કરો.
moment है.
Now tell us, Kisan bhai, what do you think will do well in the times to come? What sectors?
Generally, I try to invest
मुहूर्त
sector
ट्रेडिंग
wise.
यहाँ पर हो
So,
चुकी है.
railway is doing well, defense is doing well, them particularly, and now
फिर एक बार
almost
की ओर से मैं
except
सभी
IT
को
industry,
दिवाली की
every industry
शुभकामनाएं
is
देती
doing
हूँ.
better.
Okay, so Mr. Choksey is saying that railways is doing well, defense is doing well, and a few other pockets are selectively looking okay. Defense, Kisan bhai, a lot of people say that the stocks have already run up quite a bit. Can they do more? What is your thought on this?
That is, I think, the way the government wants to equip itself with their own weapons. I think there is a lot of scope.
Okay, you see this as a multi-year story?
Yes, definitely.
Okay.
Because we are on the right track.
Okay. What? It's a very wide sector, Kisan bhai. What is it that your brokerage house has recommended to the clients in the defense space in the last few months?
We have what has happened, the willingness of the government to support the sector. That is first thing. And secondly, we are looking at the working of the various companies.
Yes.
They are doing well.
Okay.
And they are every year, because we have now getting the quarterly result. So we can understand the work progress company has made.
Most certainly. So what are the companies that you like, Kisan bhai? If you can tell us, I'm not asking you for a buy or a sell recommendation, but what are the stocks that you've liked or your brokerage has recommended to your clients? Can you talk about them? It's okay if you don't want to, but defense as a sector looks good to you.
Yeah.
Okay, fine. What about banking? Large banks haven't quite done anything in the last few months. HDFC, Kotak, SBI have all been languishing. Do you think their turn will come?
Like public sector, what I told you, it is the public sector banks. They have done very well.
Okay.
Means we are
Yes.
seeing that each and every bank is doing very well, and that is helping the economy because people in industry they want money to run
Sure.
the. It
Witness,
is
ladies and
easy to able to
gentlemen,
get it.
But we haven't seen State Bank of India or a Bank of
I can
Baroda
see
or
a
others do
lot
well.
of
Will they
happiness
start
and
doing well now?
excitement on my right hand side.
State
Once
Bank of
again, happy
India
Diwali to everyone.
chairman
With this,
recently
we
said
conclude
that
our
our money is
Lakshmi
getting
Pujan
deeper
and
12
Murat
to
trading
13%.
ceremony. Thank you so
12
much
to
once again,
13% is
everyone, for
quite a
joining
good
on this
rate.
auspicious moment. Anchor
Okay.
21 and for signing
Kisan
off.
bhai, last
Please
couple of
enjoy.
questions.
Please take
Last
lots
couple
and
of
lots of
questions.
pictures. And once
One,
again, happy Diwali to all of you.
some years ago, you were
Also,
bullish
when you
on
upload
chemical
pictures, do
companies.
not forget to tag
A
BSC
lot of viewers
at the rate
are
BSC
stuck
India is
in
our
chemical
handle on
companies at a
social
higher
media.
price.
Please take lots of pictures and
Do
happy
you
Diwali
think
once
they will
again.
come back at some point of time?
I told you of the sectors that we are following and I am following. Basically, up till now, chemical industry was not doing well because we are linked with the world market. Now, very recently, the situation is getting changed.
Okay.
And the finest example is nickel nitrate, the leading company, and they just started doing well.
Okay. Kisan bhai, I have one last question. From the times that you've been operating in the market, the capital markets have changed. We are seeing 16, 17,000 crores of SIP flows. Options have become very large and across the board. Do you think the capital marketplace, brokerages, mutual fund companies, which are all listed, do you think they will do well in the times to come?
I think there is the people who they are employed to look up, identify the good companies and the good sectors. There is a lot of scope for all these institutions also and mutual funds also.
Got it. Okay. Kisan bhai, before we wrap up, tell us one guru mantra, something that you always do when you're choosing an investment, something that you look for in a company, something that you think if this is there, then I'll avoid the company. One guru mantra from you.
Good business and good management.
Okay, that's a really big guru mantra.
Yes.
Great. Okay, Kisan bhai, thank you so much for joining us. From all of us here at BQ Prime and NDTV, thank you for your time. Viewers, thanks for tuning in.
म्यूचुअल फंड सही है super hit campaign. It has worked. Indians have believed it and they have put faith in the mutual fund industry. But you are now also the custodian of lakhs of Indian families' plans for their future, for their retirement, what their children will do, their education, etc. It's a big responsibility. How are you going to ensure as an industry that that faith is not shaken?
Absolutely. And I always say this, that this profession is amongst one of the most noble professions in the world, one of the most noble professions in the world. Somebody is trusting their money to you to ensure that their life goals are met over a period of time when they need that money back. And this is what our industry has been doing. And over the last several years, going back into decades, I think our industry has exhibited that maturity, that sincerity, that deep sense of trusteeship, that deep sense of a steward of other people's money, and that's how we have grown. You talked about 46 lakh crores. I remember 20 years back when we crossed 1 lakh crore AUM in the year 2002. We were 6 lakh crores in 2012. We became 36 in 2022, and now we are at 46 lakh crores. You talked about the SIP flows, but I give you another interesting number. 10, 11 years back, monthly SIPs used to be around 1.5 lakh. The new SIPs that are starting used to be 1.5 lakh per month. Last month, it was more than 30 lakhs. And this comes, as you rightly mentioned, this comes with deep sense of responsibility. And I think all of us in the industry are fully cognizant of what the society expects from us, what regulators expect from us, what the wider policymakers, everyone expects from us, and we will continue to work harder and harder to ensure that their trust is maintained with us. There's a famous saying, I think Adam Smith, who said that trust is the oxygen of capitalism. Trust is the oxygen of capitalism, and I think each and every person in the industry truly lives by that.
You know, we'll come to the finer details of what's happening in the industry since I've got this opportunity to get you on it. But I just want to follow up on our train of thought. The reason people are investing in mutual funds in such large numbers and actually treating this as a store of their future wealth is because they're seeing this and they're hoping this gives better returns than what they used to love. In India, it was typically your FD or say investments in real estate, etc. Is the mutual fund industry today beating that? And what about investors who feel that they can do much better on their own in the markets? Look at the number of fresh demat accounts. Investors are going out on their own as well.
No, investors have been investing in every possible thing, right? Historically, we always used to say Indian investors prefer gold, they prefer real estate. Of course, large part of the savings would be in bank deposits. Even insurance has been considered historically as kind of like investments for long, so on and so forth. Mutual funds still are very small proportion of allocation of large number of Indians. All said and done, we have talked about big numbers of the AUM, but there are only 40 million or only 4 crore unique investors in the mutual fund industry. So we have a long way to go.
Will it indeed be a Mubarak Sal in the next 12 months?
Yeah, I think we are looking in our base case scenario for another good year for equity markets. There are, of course, as usual, many imponderables, and it's certainly not lost upon anybody that the general elections of 2024 will occupy everybody's top of mind recall. And what happens in those elections will probably determine the course of the market in the second half. But I do expect a pretty good first half. The other imponderable is, of course, what happens to the world at large. And the world is going through its own tumultuous phase. We've seen real yields in the US rise and then fall. The Fed seems to have taken a pause. Morgan Stanley's view is the Fed is done. Fed has not explicitly said that, but if it is done, then I think we're probably looking at almost an implausible soft landing in the US, and that does give you a good setup for 2024. So my base case is the market will assume that India will vote in a majority government with continuity, and therefore will actually bid share prices going into elections. And then, of course, what happens in May next year, assuming that the elections happen as per the current schedule, will then decide whether the market continues that or goes through
Okay. So, Rhythm,
a
what?
volatile phase.
No, please continue. Sorry.
Yeah, no, if the elections produce an outcome that is not in the market's favor, then I think we could get a pretty significant drawdown.
Let me ask him what I wanted to ask. Rhythm, so there are two geopolitical conflicts that are going on. It almost seems that it becomes second nature. There is Fed commentary which might have a bearing and some other factors. Oil, not the least important, of course. Would it be safe to say you still believe that it will be a domestic-driven event, namely elections, which will drive or have the most important bearing on markets for this Samvat?
See, Neeraj, India's correlation of returns with global equities have been declining now for a few years. And in fact, India's beta to EM is now down to zero point 0.4, defensive market in the world. And if the world outlook remains fragile, then India, I think, on a relative basis at least, will continue to power ahead. The absolute return cannot be exceptionally good if global returns are not good, because remember, India is not a small cap market anymore. It's a large market in the global context. So it cannot really be out of sync with the world. Now, the points that you raised, one on geopolitics, it has to translate into something which matters to the Indian economy, which is oil. So the two of them are closely linked. If the geopolitics is not producing a bid on oil, as we are seeing right now, despite the two unfortunate wars that are happening, it's not like oil prices are surging ahead. They're struggling to make headway, and in fact, they've fallen more recently. So if oil remains range bound and searches for lower levels, then the geopolitics really doesn't matter. What the Fed does is important, because I don't think the RBI will want to front run the Fed. So inflation in India is coming into the range. Core is actually quite well behaved. I think some of the food price volatility will ebb as we get into the winter months. So even the headline inflation will look pretty okay. But I think the RBI will wait for the Fed to signal that it's done before it actually acts on interest rates on the downward side. Now, that said, because India's growth is quite good, I think the RBI will continue to err on the side of caution and not attempt an aggressive rate cut. So that's the impact of what the Fed does. The third aspect, which you didn't raise, is what happens to global growth. Now, China is showing some recovery of growth, but all eyes on the US. Can the US escape this steep rise in interest rates with a soft landing? History suggests that doesn't happen. And given the nature of the rate hikes in America, the equity markets and the bond markets until recently thought a recession is almost invariably going to happen. Of late, the markets seem to be getting a bit more relaxed. And if the Fed does engineer a soft landing, that I think will make the global backdrop quite good for India. So that's how I would analyze the global factors. And then going back to your question, therefore we come back to domestic events, which will still account for bulk of how India performs. And within that, of course, earnings, which I think will look pretty good, at least in the next 2 quarters. And then elections, which we discussed, but we can go into greater detail.
Well, thanks so much for tuning in. We are live from the Bombay Stock Exchange, the Motor trading session. Hope it's going well for you. It's doing very well for me. It's going very well for me because I will be over the next 15 minutes in conversation with one of my favorite guests. And there is a 1+1 free today because not only is Ramesh Damani with us out here, but also his son Ashok Damani with us. Both of you, thank you so much for taking the time out.
Thank you, Neeraj. Happy Diwali to you and all your viewers. And as you said, the lights in the money house are shining brighter because the next generation is on TV for the first time with me. So it's a great kick for me to have my son being interviewed with me.
Yeah, no, and I've heard volumes about him from participants in the market and the way you said that he analyzes companies. So I'm looking forward to this conversation as well. But with due credit to you, I'd like to start off with the big man first. So, Ramesh, this Samvat, everybody's talking about how markets have done really well, India has done well. What could happen over the next 12 months? What's your sense?
You know, I think I was telling my son on my way out here that when I started, the index was 1,000, now it's 60,000. And everything known to mankind has happened in India, from Kargil wars to government change to global financial crisis to global warming. And yet the index finds its way higher. So it's very hard for me to say what the next 1,000 points are going to happen on the index. Maybe they go up, maybe they go down. I'm not an astrologer, but I'm pretty sure the next 20% is higher on the indexes. I think it's a great time to be in India, a great time to be investing in equities. Despite the great run we've had over the last 30 years, I think the next 10 years are as promising. So my advice has always been, be invest in great high quality businesses. I mean, that's your volatility you have to deal with. Markets could go down because geopolitical reason, inflation, any elections in India, whatever. But the long-term trend remains at a higher level for India.
With the presumption that we are in the midst of a bull market, Ramesh, usually, as you've said so many times, that the leaders of the bull market always change. Now, we've had a bet that you made very successfully is PSUs. They've done remarkably well. Do you reckon they are an ongoing part of the bull market leadership that will stay with the PSUs?
I think so, because we are still what I call the second phase of the bull market. So I think there's a ways to go. They'll probably culminate after the election results are known, the national election results are known. I think rather than look at the stocks that have worked, there's a whole basket of PSU stocks that are still at a fairly modest multiple, at a fairly distinctive yield. So money can be put into those kind of stocks. Typically, bull markets don't die out like that. They will take a time and they'll culminate in a huge upward movement. So I think there's some ways to go in the entire bull market segment. But if you're looking for value, you want to look at the other rather than the ones that have already, the defense, the rail, or the banks are already in the sectoral spotlight, in my view. But other than that, I would like to suggest, you typically ask me, where's the leadership in the market or where's the new leadership in the market? You know, one thought that came across to me, Neeraj, was that you have, when Biden and Modi met with the G20 summit, they talked about the India, Middle East, Europe corridor building. That's a huge infrastructure project, and that will create huge opportunity for India and trade in logistics, in transportation, in construction, in cargo. So which are the companies that get benefit from that? I think you should start looking at that, because that seems like a new theme. It will still take 3 years maybe to play out, and they'll probably be delayed because of what's happening in Israel right now. But I think that represents a singular opportunity to deploy serious money at very low valuations yet. So I would look at the port handlers, the railway construction companies, some of the shipping companies, the logistics company, all those who benefit from increasing trade volume with India, the Middle East and Europe.
Interesting. So, father and son usually think differently. It happens at my house for sure. Are you thinking differently than what Mr. Ramesh Damani is thinking?
I think the principles remain the same, but I trying to make my own path, I guess.
Of course.
Yeah. So while I agree with the railway, the cargo, the logistics story. I quite like the defense space, and I think there's some more value to be had there, or to be accrued over there, specifically in defense, aerospace.
Okay, so the path seems to be long, but what Ramesh just said, that some of these businesses have already made a significant move higher, some may not have. The commentaries from the companies seem to suggest that they believe that the numbers that they will clock in at some point of time 5 years out will be multiple times what they're doing right now. How are you thinking about these businesses therefore?
As my father and all of his illustrious friends have told me, believe in India, buy India, and remain invested. So I'm hopeful, obviously, over the next 5 years, 7 years, 10 years, that earnings multiply from here.
Okay.
That's the strong base that we're forming.
Okay, okay. So that is one. The second point that Ramesh Damani mentioned was about how you look at newer pockets which might benefit. Now, he mentioned a very interesting thing. Do you like looking at a space which might potentially benefit from something that looks as large as the India-Middle East corridor, infrastructure, port handlers, cargo handlers? Are you liking these businesses as well?
I'm liking a few of them. I think being part of the younger generation, have managed to study abroad. I like a lot of the sport franchises, which some are subsidiaries of other companies. I think that way it's a very compelling opportunity over the next 10, 15 years for India.
Okay. Ramesh, any thoughts that you have on why is it that some of the leaders from a sector haven't quite able to put up their hand? I mean, you look at banking, the HDFCs, SBIs, ICICI banks or Kotak haven't quite done, but the lower rung has, if you will, if I can call them a lower rung. IT, we haven't seen the Infis and the TCSs do well, but the Persistence, KPITs, etc. have done well. And we've seen that in multiple other sectors. What's the reason? Usually the leading stock does well. Why is this time different?
I know, Neeraj, it's a question that's perplexed everyone. I think the answer is very simple. Actually, they've over-owned and over-loved. Over-owned and over-loved. I think every mutual fund and the mother owned the private sector banks, so the public sector banks did well. Everyone was very bullish on the largest stock exchange in India, so the BSE went up 5x. A lot of time after time I've seen that over-ownership and over-love of stocks makes them almost the kiss of death. So I think a lot of the sectors that move, the defense, the rail, the public sector banks, were all under-owned and underappreciated despite having earnings. So, there's the theme in the market that really worried me a few years back when people said we'll buy quality at any price. You cannot pay any price for it because that ensures that returns are going to be poor. You could have bought Lever, you could have bought Infosys, and for 10 years you didn't get a return, though they were the best companies in India producing excellent results. So it always has to be in relationship to the price that you're paying for it. I think sometimes the fund managers forgot that.
Yeah, I guess so. Ramesh, the other thing that you always told me is that in the past, maybe at times, while you backed up the truck and bought, but it was not as heavy as you would have liked it to be. Is this market mood, the momentum, the strength of the Indian economy and the favor that a lot of other economies are giving to India, give you the confidence to be able to do that?
It's a two-edged sword. It's very difficult to do. It's easier to say than to do it. And as I think I mentioned in the prior interview that I've done, what has helped me actually do better, not really backing up the truck, but doing better, is that I have now my son at my side. He's forcing me to examine the mistakes I made and try and correct them. And only a son can do that because only he can speak truth to power. Nobody else, I'm done well, nobody comes and criticizes what I say. So that's been the great thing about the partnership that my son and I enjoy now, that he's forcing me to relook at my career and rectify the mistakes I made. And the more important point I feel, Neeraj, and you'll be around for that, is that hopefully the next generation will take the mistakes I made and not make them and go forward and really back up the truck. Because I've been inspiring them to do that.
No, but it's a great day. So let's talk about good things. Hopefully, all three of us are around, and the fourth generation also comes and does an interview with me. So I'm looking forward to that.
Hi Veer, hi Arna.
Cross fingers for everything. On this day, you never know कब माता लक्ष्मी सुन रही है और समझ ले. So let's hope for that. Last couple of questions to you first. And a lot of times we tend to look at what great investors have done and try to follow that. Now, your dad is a great investor. One of the things that he's always spoken about is that even back then, he used to look at the opportunity size of an industry and then used to think that if the whole sector is available for such a small sum of money, then surely I can look at this sector, look at a good company, look at the leader and buy and hold. I mean, United Spirits is a well-documented case study, I would presume, when it comes to one of Ramesh's ideas. Do you, while you think differently from him, do you like this ring of thought, and therefore are you trying to look at any of themes or any sectors in that fashion?
I think the principles remain the same. They have to, otherwise they're not called principles, I guess. You want to look for the blue ocean strategy, the massive TAMs, of course. But as he's taught me, and being a product of the environment, there has to be a basic understanding of the market cap and the business. and then I think we move forward from there.
Sure. Okay, let me ask you, is there a basic understanding of any particular theme wherein you feel that, hey, how is it that this whole sector is available at the price of chips, if you will?
Well, what we're doing right now, the media industry,
Oh, okay.
in my view at least,
Uh-huh.
I think we have 1.5 billion people obsessed with media, Bollywood, Collywood, Tollywood, cricket, and it seems like they're all trading quite cheap. So, and a massive opportunity, of course, ahead.
And a sector which is kind of consolidated as well.
Consolidating,
Consolidating,
and
yes.
unloved. So, it could be a recipe for success.
So both of you are talking about unloved themes in some sense to kind of begin with. So the final set of questions to you first. If you had to, at the day of Samvat, Ramesh spoke very well about how you are helping him correct his mistakes. But if there were one quality that you would take in from your father for your investing going ahead, I'm sure you've taken a lot already. But if I were to ask you to think of one such quality, what would that be?
We don't have enough time.
No, we do. Okay, so pick out one.
The integrity and the independence of thought. I think that's front and center, in my mind and my heart. Yeah.
Great. Well, Ramesh, I'll end the conversation with you. The child is the father of the man always. If you had to do the same, take up one quality from Ashok for your investing years ahead.
I think he brings a level of conviction which I was plagued with self-doubt when I was young. Was I right? Is it going right? There's smarter people than that. But I think he's a product of his own thought process. So he brings a lot of conviction to the table, which he's passing on to me. And as you know, your child is your strength, So he's, actually lifting me out of old age, and I'm enjoying my life again. I'm enjoying being in the office, enjoying thinking about my grandkids. So I think the sheer level of conviction that he brings and concentration he brings to a portfolio has actually helped me out, Neeraj.
Now, not that I think you needed to be lifted, but so be it. I'll give credit to him there. But Ramesh, Ashok, gentlemen, thank you so much for being with us on the Motor Trading Session, and to you, your families and your teams, a very happy Diwali and a prosperous New Year from all of us at NDTV and BQ Prime.
Thank you so much, Neeraj. It's such an honor to share a platform with you. Always, you've been one of the most seasoned interviewers, and the fact that I shared with my son brings me special joy.
It's a pleasure to have him, Ramesh. Really.
Thank you, Neeraj.
Thank you. And viewers, thanks for tuning in.
Diwali is always an exciting time for markets, investors. The mood is upbeat, but there's something different in the air this year ahead of Samvat 2080. I'm talking about the general mood in the stock markets, the idea and the belief that India is on the cusp of something very, very big, and the fact that we continue to remain the shining star among emerging markets and in a global gloomy space. We're talking to two very special guests today. I'm Tamanna Inamdar. With me is my colleague Neeraj Shah. Neeraj, this is beyond the usual happy Diwali kind of feeling, isn't it?
Yeah, it does feel like it. For us, even more so, a television station launch in the offing. So lots happening at our end too. But yeah, you're right. I mean, just so much happening around, and not just the domestic investors, which is the SIP flows, but large global heavyweights acknowledging the fact that you recently saw JP Morgan and others putting India in overweight position as well, despite the valuations. And hence, Tamanna, I think that this show, with two people who are astute investors, years of investing experience with them, and both of them have been for the last 12 to 18 months saying that there is something special about what happens in this decade in India, and which is why absolute pleasure to have in Hiren Ved and Sunil Singhania on the show today. Gentlemen, thank you so much for taking the time out, both of you. And at the onset, to you and your teams and families, a very happy Diwali and a great festive season.
Happy Diwali to you both and all your viewers.
Thank you so much.
Thanks, Neeraj. Happy Diwali to both of you and to all the viewers. Happy to be here.
Thank you. Thank you so much. Lovely to have both of you. I'll go in the alphabetical order. Hiren, I'll start with you. What's your sense? Does it seem that while the signposts are talking of a lot of caution factors on the global front, could India do something special in this Samvat as well? Upcoming Samvat, I mean.
Yeah, I mean, I think the domestic economy in relative terms, seems to be doing very, very well. We obviously have to be cautious about geopolitical challenges, energy prices, and so on and so forth. But I think the Indian economy today, from a macro perspective, is far more resilient than it was in previous cycles. So it's not as if that we've not faced some of these uncertainties before. It's just that today we are far better equipped to manage some of the shocks. And that's what is being reflected in the resilience of the market, in the resilience of the corporate sector. And I don't see that unless there is something which is really out of the ordinary. I think this strong footing into the next Samvat year should definitely continue.
The question.
Thanks so much for tuning in. We are live from the BSC at the Motor Trading Session, and a very special guest, somebody who helps millions of investors grow their wealth through multiple schemes at the Aditya Birla Sun Life AMC, Mr. A. Bala. Bala, thank you so much for taking the time out. Lovely having you in at the outset. To you, your family, and the team at Aditya Birla Mutual Fund, a very happy Diwali and a prosperous New Year.
Thank you, Neeraj, for having me part of the show today. Anyway, it's an auspicious day and Samvat 2080 beginning, and also the Diwali day, and I wish everyone, all the viewers and the investors and supporters of mutual fund industry a happy Diwali and a prosperous New Year.
Yeah, well, thank you for that. I'm sure all of you has echoed that sentiment that I'm saying as well. So, what's your thought? I mean, there is a lot around the world happening currently, and over the next 6 to 8 months, it's a heavy calendar as well. What's your feeling about the new Samvat?
I think it's going to be, of course, interesting to see the new year on multiple angle. One, equity markets have been reflecting good amount of buoyancy, and earnings have been pretty good across the world. And there is a disconnect between the growth versus the slowdown. So the growth is happening, employment market is very good in US, interest rates are high, and yet equity market has been done, is going up. The same way from India point of view, the macroeconomic factors are very good. In a multiple side, if you see, interest rates are stable, the current account deficit is good, and foreign currency exchange are quite stable, and earnings of the companies have been very, very solid. And despite interest rates being high, the cost of borrowing has not gone up. Therefore, the consumer spending continues to be good, and rural economy is on the verge of showing some kind of uptake.
You think so?
So it's showing uptake. Of course, agricultural crop has been pretty decent. Different views are coming. I only go by the consumption is coming from the mass as the population. So people actually look at upper end of the market and lower end of the market. I look at the middle end of the market, and the middle class population seems to be on the spending side. Gradually, they're coming back. And we've also seen a good amount of buoyancy in the real estate market across the country. But all these things are actually a good sign for the broad economy to do well. But having said that, I think the geopolitical risk where it could have an impact, whether it's an oil price or the geopolitical risk, how long it will continue and where all will continue. These are some of the question marks we always remind. And second is the US has been surprised on the growth side, and it can falter at any point of time. Even there's a marginal drop in the job recession kind of thing which comes in, then probably we'll see some bit of slowdown in the global economy. Therefore, it could have a negative impact on the market as well. Therefore, it's going to be very interesting to the overall momentum. And last but not the least, this year will also be an eventful year where there's going to be a general election. Absolutely no doubt that this will have a huge positive impact from a broader perspective, but still there's always some of the moving parts which will have to track. And that's where the market is always driven by that. It will always remain question mark. One good thing that remains from market buoyancy point of view, the flows have been very good.
Yes.
I think mutual funds flows have been very good. SC book has been rising, and incremental participation coming from investors each day have been going up. And there is some element of acceptance. Yes, mutual funds would always remain the permanent vehicle for one to save, and this something is a big sign, good sign. And I have not seen in my last 30 years of career there's a kind of participation coming in the equity market through digital platform to direct participations. I think this is something my view will always remain whenever the flow is good, because there's always a belief that the flow is good, don't go against the flow, and you have to go through the tide and stay with the flow, stay with the tide, and that's something seems to be one other thing which is driving the market sentiment as of today.
Are subscriptions in your mid cap and small cap funds still open? Because there the money seems to be coming in every month.
Of course, it's great. We kept it open because we don't generally close it out except reduce the ticket size and so on and so forth. Of course, money has been chasing actually only the places where there has been a significant higher return with the equity. See, normally what happens in the equity market, even in the mutual funds, wherever the past returns are substantially higher than in the market, they tend to actually go and put money there. And wherever the performance actually is a little above the index or middle average, and that comes as the second consideration. And if you go by that principle, the money flow has been actually going only towards chasing the return, which also in my view is not something that's great. It should happen, but that's the way public at large behave.
Yeah. So, but just a thought, when you guys talk internally about the kind of movement that has happened at the broader end of the spectrum, but the money is chasing, so the flow is there. Do you get a bit skeptical or skittish about how the forward returns in mid caps and small caps would be, or is it still easy to deploy money coming in the mutual fund schemes at the mid cap and the small cap end? Because somebody was making this point, there are the whole host of new sectors that have gotten formed in the recent past are all at the broad end of the spectrum. We don't have too many large caps there, EMS, defense, etc.
I think the way market it evolves, right? I think when the market is small, you always find it difficult to find companies for you to make investment. And today, the number of sectors which got emerged in the last few years, the number of small size companies which are highly capable, having high capability on the engineering and science and technology side, a lot of Indian companies are the small size companies. They are now suddenly they are unleashing the potential for them to create value for themselves first as a business person, as well as for the shareholders. So therefore, that's something that always happens. The other issue, of course, is the valuations. While it can vary from one sector to other sectors, but there are certain sectors that also looks promising from the future outlook point of view. That's something is I don't think it's by identifying companies for investing is an issue. I think where the issue will come is if by any chance there is a crash in the market and there is redemptions, then how would the market will behave and so on and so forth. That's something we'll have to see. But again, given the fact that money managers, when you identify companies, they will look at not only fundamentals, second is the liquidity, and then how the portfolio construction has happened. Mix of large cap versus small cap and mid cap. But that construction of the portfolio, once it is taken care, I don't think one should worry about it. Again, somebody has coming the investment for about 3-5 year period, then not an issue. If somebody comes for 6 months, saying in 6 months I'll get 15% return and annualized comes about 30%, therefore after 6 months I'll move out. Such kind of investment, such kind of behavior in the market can at some point of time make people get disappointed.
Okay. There have been a number of very interesting schemes that have come in from the AMC space, right? Your house and a few others, a US Treasury Fund, so on and so forth. What is the most interesting and innovative product, according to you, in the last 6 months that investors should take note of for the next, not just the next summer, but the next few summers?
So of course, given the fact that equity market has been rising quite substantially, and we have seen one of the best return even during these GDP growth close to about say 7.2%, and the equity market has given one of the best return that has delivered. But that being the case, definitely it's a hybrid funds becomes one of the natural choice because it actually protects the portfolio from any potential volatility that could come from the equity market. Second, the US table, what you just mentioned about, we saw an opportunity to invest in overseas market given the fact the best of the sovereign in the world, which is the US, which is giving about 4.85% on a 10-year bond yields. 30-year is almost about 5%. 2-year is close to about 5%. And money is being remitted overseas. And most of the Indian investors also like to actually remit money overseas, not for their investment purpose, is for the future education purpose for the kids and so on and so forth. Therefore, we launched this fund for two reasons. One, we are providing a vehicle for making a dollar investment to be made through the mutual fund. Second, you are investing in a US bond, which is one of the highest rated bond in the country, sovereign in the world, which is sovereign bond, offering at one of the highest possible rate. From 2008 till date, it is the highest rate at which it is trading. And third, of course, is the rupee depreciation if at all happens, because rupee has behaved quite nicely in India. Assuming scenario, at some point of time, rupee depreciate by 1 or 2%, you get their benefits as well. And next year, in 2024, and there is high probability that US will reverse the gear on the interest rates, hike from neutral to cutting cycles, which could probably come in 2024 or 25. As the interest rate cycle starts coming down, there could be a correlation because equity market could actually be going the other way around. I mean, when the interest rates drop, it drops because of the mild recession kind of thing. Then equity market may get stabilized and the bond market will rally. Therefore, it's always better to hedge the portfolio. I think it's something if you think that it's going to be permanent, that is the time I think you will end up making some mistakes. I think I believe having good mix of fixed income and equity through the hybrid funds and funds like this to put your dollar saving for overseas market, overseas any travel purpose or investment purpose or education purpose could be a good opportunity to catch.
Got it. I have one final question. I know you don't talk stock sectors, obviously you're the CEO, but I would love to understand what do you think of the asset management business per se. Now that the SIP flows are so high, other flows are very high, and capital market investors have really gone up substantially. Do you think the businesses which have been maybe under a bit of pressure on the yield side because of various factors could see some momentum in the next 5, 6, 7 years?
Momentum for the MF industries?
Yes, for the AMC business.
AMC business, I think the momentum will be very high. For one simple reason, the financial savings in the country increasingly finding its way to the capital market through the mutual funds. And savings in general is a pattern moving away from traditional savings like gold and real estate to the financial asset class, moving away from fixed deposit. Therefore, my assumption is the next 5 years, if you look at it, the mutual industry size will become 50% of the banking industry size. And today they are about 20% of the banking industry size. Next 5-7 years will become 50% of the banking industry size. But at the end of the day, every citizen of the country how to make money which is more than certain percentage of the beating the inflation, because the cost of inflation, if you have to take at least one has to target anywhere between 9 to 11%.
Sure.
In my view, that could potentially come in the mutual fund industry over a period of time. Therefore, I will not say we are just scratching the surface. I think the awareness for investing in mutual funds, I think each passing years have been going up. The next 10 years will be the great growth, which will be equivalent to last 30 years what you have done.
Got it.
Yeah.
Great. Okay. Well, thank you so much, Mr. Bala, for joining us today out at the BSC and giving us your thoughts. And once again, to you and team, a very happy Diwali and a prosperous New Year.
Yeah. Same. Happy Diwali, Neeraj, and happy Diwali to your family and friends and relatives.
Thank you so much. And viewers, thanks for tuning in.